Hello everyone, welcome back to TechnoCharts YouTube channel. In the last video, we analyzed around 16 IT stocks which had broken down or which were at near stage 3 support. So in today's video, we are going to analyze around 7 to 8 stocks in the first part and around 7 to 8 stocks in the second part. Right. So the first stock on my watch list is CDSL. So if you look at the chart of CDSL, you can see that the stock has broken down from the 30-week moving average. The black line is the 30-week moving average and the relative strength is 52-week, right? So if you look at the chart, you can see that the structure has broken down severely. And if you look at the volumes also on the daily time frame, you can see that volumes are rising on the fall, right? So this structure is a negative structure and overall a bearish structure. uh, After the breakdown of around 1190 rupees or so, the only next support that I can see on the chart is immediate support is at around 950 rupees or so, right? So this is one of the stock that you have to keep in mind before entering into a trade, so that I mean, because if you enter into a wrong trade, then you may have to get stuck into this particular script for a very long period of time. As you can see that the stock has given us a massive return of more than 400% or so in a very short period of time of around 2 years. So this can go undergo through time correction as well as price correction, right? So this is the first CDSL chart. Levels to accumulate, the only level to accumulate I would prefer is at around 950, and I would wait for the moving average to uh, flatten down, then only I would wait for buying it, right, for the longer period of time. The second chart is INDIAMART. So if you look at the chart of INDIAMART has already given stage 4 breakdown. I mean, breakdown from stage 3 has and entered into stage 4. So the stock has already fallen 40% to or to 35% till now, from the base of around 7,000, and the stock is fallen 50% from all time high or its 52-week high. So currently, as you can see that the stock has been in under time correction from January or so. So I don't see any kind of buying opportunity here until and unless the stock touches around 2,700 or so. So the stock may definitely uh, reach till this period, or can reach till this level or so, right? So the third stock is SBI card. So SBI card has already reached the stage 4, and as you can see, stock has broken down and retested the area and again broken down, right? So if you can see the volumes have been the highest on the breakdown. So this is also, and the relative strength is also in negative. So overall the chart structure is bearish, and there is no buying opportunity as of now in this particular script. I would only prefer to buy once the moving average settles down and forms where SBI cards a new fresh stage 1 base, so that we can enter after the stage 1 breakout. The fourth stock is IDFC First Bank. As you can see, IDFC First Bank has been sideways from its listing, and currently, if you look at the chart, the stock is at support as of now. Overall, overall the stock is looking sideways only, and I do not see any kind of upside in this particular script. The fifth stock that we are going to analyze is IB Real Estate. So many people are stuck here in this particular script, that is IB Real Estate. Now most of the people had been anticipating the merger would be positive and the stock would have 200 300 or so over a period of time. But as you can see, the stock had broken down the support, and the stock is down 50% from the stage 3 base and around 60% from the stage 4, or the topping period from the topping area, right? So as you can see, the stock has reached again the areas of coronavirus area, right? So I see that the stock is heading towards around 45 46 rupees. So the stock may fall again. A further fall of around 30 to 40% is normal in this stage. So I do not get surprised if you get the stock again at 45 rupees or so, right? Even if not at 45, but you will see that the stock will be staying sideways in this area for a very long period of time, until and unless the stock gives a stage 1 breakout. The fifth stock, or sorry, the sixth stock that you can see is INDIABULL Housing Finance. Most people have been anticipating INDIABULL Housing Finance as the next multi-bagger, because Rakesh Junjunwala sir has bought it and whatnot. So if you can see that once you buy a stock that is in stage 1 sideways zone, then there is no going back. So people who have bought it are in June July 2020 also are still sitting at the same price. So Rakesh ji has bought at around 240, 250 rupees, but he has a different risk appetite. You do not know how long he can hold, and you do not know how much percentage of portfolio he has invested into this particular script. And even though if he loses the India Bull Housing Finance to 0 rupees also, it is not going to affect him much. But can you afford to lose India Bull Housing Finance, or can you see India Bull Housing Finance as 100 rupees for 50 rupees or so? No. So do not anticipate or buy depending upon others portfolio or other bigger investors portfolio. So this was one learning that I wanted to give, or that I wanted to share with everyone, ki stock in stage 1 can stay sideways for 2 years, 3 years, 4 years or so. We do not know how long the stage 1 is going to last. The next stock is MOREPENLABS. This again is a stock that had been a favorite investor stock for many period, and as you can see, the stock is already in stage 4 downtrend, and the stock is taking resistance from the 30-week moving average. So this is one more stock that you should be avoiding, and I do not see any kind of upside as of now. See, these views are depending upon the current market scenario plus the current price action. So views may change accordingly as the price moves. I'm not talking about the fundamentals of these particular scripts, that but I am talking about the technicals, because technicals tell you when to enter, when to exit. Fundamentals tell you how long to enter, how long to hold, and how long to exit, right? When to, right? So that is one thing that you have to keep in mind. Views are purely based on technical analysis and not on fundamental analysis. The next stock that we are going to analyze is Clean Science. So if you can see the chart of Clean Science, let us analyze the daily chart. On the daily chart, you can see the stock had important support at around 1900, and currently if you see the stock, the stock has a support at around 1750 rupees. So overall the stock structure is in downtrend. As you can see, the stock has a lower high, lower low structure, so not much of an movement is expected as of now. Once the results come out, then we may expect some kind of movement depending upon how the margins have played out and how the results have come. So currently things don't look good, and weekly time frame we do not have any data because the stock has been listed recently. So these were the few stocks that we analyzed in the first part. So do watch the second part to if you want to understand the analysis of MTR Tech, Zomato, Nykaa, Paytm, Divis Labs, CAMS, Prince Pipes, Polycaps, and Nitin Spinners. So these are the stocks that we will be analyzing into the second part. If you like the video, do share it with your friends. Plus, watch the video on IT stocks breakdown so that you can refer to the levels of the IT stocks that have broken down. Thank you.